Welcome back to another episode of Weekly Market Review, and we're diving a little bit deeper today into market psychology and market behavior. I've been seeing a lot of headlines about S&P 500 enters new bull market in the past couple of days, so I'd like to dive deeper into that. See you in just a second. Now let's talk about this. We play a game in which we don't make the rules. The fundamentals of financial markets are not favorable for typical retail traders. If it was that easy, everyone would be a millionaire. So I've been seeing a lot of headlines in regards to S&P entering a new bull market. And when you actually put those sentiment reads on a chart, you'll start to realize that the timing of these headlines are at very pivotal points of the market. So let's dive into that real quick. Back in June 2022, S&P is now in an official bear market, according to S&P Dow Jones Indices. June 13th, June 14th. What to know as S&P enters bear market territory. That was at the initial first low in June. Not long after that, we rallied almost 700 points on the S&P, on SPX. Now, if we fast forward into September, US stock market has yet to find a bottom, September 2nd. This is Bank of America's analyst, Xenith. Not long after that, just about 200-300 points later, we found the bottom in the market, which is only a month after that post. Just a rally about 20% into the new highs. Now, I remember all of these headlines coming out last year when we were near the lows, mainly because in January of 2022, I had personally written a market analysis for the year. And based on my analysis and the research spending a whole weekend on, I found a target of 3,500 to 3,600 on SPX, comparing it to the fractal of the 1980s to the 1990s. So I remember these headlines very clearly. Now, we can even take a look at some other calls that mainstream media has made. Let's take a look here on QQQ. Well, it seems like Xenith, in February 23rd of 2023, she said, tech stocks free money era is over. Not long after that, QQQ rallied over 20%. She must have missed the entire tech rally on the AI boom. Now let's look at Dow Jones. We take a look at DIA last year, as well in September. S&P, Dow, NASDAQ, and bear market and global recession fears. Dow plunges 500 points. Bear market returns as Goldman warns recession would hit stocks harder. Well, guess what? Not long after that, the Dow Jones also rallied 20%. So these are things that you should be paying attention to. And as soon as I saw these headlines coming out this past week, right at the highs and right at resistance, we're currently trading right at the fibs, the GP on SPX, and we just rejected that on Friday. We see new headlines come out. The S&P 500 enters new bull market. They said we were getting a recession. Instead, we're getting a bull market. Is this a new bull market? Behold, Wall Street's new bull market. Maybe. It's official. We're in a bull market. All of these headlines started to hit the same exact day. Now, yesterday, I found another piece of gold. Bear market is over, BOFA declares. Guess who said that? Xenith. Wall Street's biggest bear admits defeat. The bear market is officially over. New bull market has legs. So the same analyst that said the stock market has yet to bottom, just 300 points from the bottom, is now capitulating on her own positions or her own analysis. And it's interesting that when we look at the fear and greed index, we are sitting right at extreme greed as soon as these headlines came out. None of this is a coincidence, in my opinion. Now, everything lines up. All of the analysis I've been doing the past week, there's nothing that tells me that your risk reward to long the market is higher than your risk reward to short it. So we'll dive deeper into that. In terms of SPX, it's evident that we had a very bearish daily close. Not only did we have a bearish daily close, we also closed right below the high of the range, which is 42.9928, the range that we broke out of. Now, we have a very data-heavy week with FOMC, PPI, CPI, and it's going to be interesting to see the type of volatility that we're going to have in the market for the rest of the week. I do have downside targets. I also do have max upside targets. For example, last week, my pivot point for upside was 43.2992. I'm going to use the same upside pivot for this coming week. In terms of lower targets, I would love to see a retest of 4,200 again. Now, when we take a look at ES, again, not the best looking daily close. This suggests a reversal, and this gap here is due to the rolling of the contracts from June to September. You can pay attention to that as well. And even if we draw a fib here, from the high into the low, we are sitting right at the GP once again. So pay attention to this week. This is essentially what I'll be watching in terms of rejections on the indices. We've covered a lot of the rotations already in the market. 2 weeks ago, I gave you guys a rundown of what to expect in the rotations. I said the tech top is likely in. You can watch for Dow stocks and you can watch for IWM. Now, if we take a look at IWM here, gave you guys the bottom on IWM a couple weeks ago, right around this 173 level. We have seen about a 15-point rally from the lows. Carvana, high conviction trade that I shared with you guys a couple of weeks ago. We executed on both the July and the November calls, and we sold into my targets on Thursday once it hit my 2067. ZS, Zscaler. This is another one that I gave you guys the bottom on in early May on the weekly watch list, right when it was $89. Unfortunately, at the time, there was news on Monday in which they raised guidance. It gapped up. I missed the move because there was no entry for me. But since then, we've seen a move into 150 from 89. I also had Overstock, OSTK, added to the list last week. Another one that played out perfectly from the breakout of this range. You saw about a 10 to 15% move this past week. Now, in terms of a focus list this week, I'd like to go back to ZS because I do believe after giving the bottom, this is a local top. I think the R is much better to short this, especially at the GP. We've broken out of this falling wedge, massive rally without any real pullbacks or reversion to me. And this is what I'll be watching for the next week or so for some downside. Another one that I want to look at is NVDA. NVDA, all-time highs, huge gap below. AI fueled ER on a lower time frame. You can essentially see two bear flags played out. The initial bear flag, we did a bearish retest twice on it. So now we need to see this broken plus the low, and then we can start moving towards gap fill. Now, interestingly enough, most of the big caps don't actually look as bullish either at these highs. Google does not look bullish. Amazon does not look bullish. Also rejecting the GP after a massive rally. Apple does not look bullish either. We did a little peekaboo at the highs above all-time high, and then we retraced under that again, under previous all-time high. So I'll be watching for large cap tech, short positions in the next coming weeks. I would say to practice caution in regards to your trading this week. For us, our community, we had an amazing week the past week. And Friday ended phenomenally. We caught every single move on the day. So I would suggest everyone who's listening in to really focused on sizing smaller this week. Now, a couple more that I want to look at. One is Moderna. Moderna's been pretty interesting to me. We have been trading in this shockwave range since January of 2022. It's been over a year. This is starting to look a lot more bearish than bullish. And essentially, I would actually like to see this entire move play out back in 2020. There really isn't much support down here once this range gives up. And that's essentially what I'm watching. There is some risk. If they actually end up using the bottom of this range as support, your R could be viable for calls. But at this point, just based on what I'm seeing on even lower time frames, this looks a lot more bearish to me. This pop off the lows into this retest and a failure to close above even this range is bearish. The fact that it gave the entire pop back and now we're breaking the low, this is extremely bearish to me. So once we give this up, I do think midterm target in about 2 to 3 months, we can probably see 100 again on Moderna. Now, the last one I want to go over is BA. This also goes in line with my rotation analysis that I provided a couple of weeks ago in regards to looking at rotation out of tech into the Dow, into IWM, small caps, mid caps. Now, BA has been trading within the shockwave for about 153 days. I look back on previous range trading from 2020 prior to the breakout, and we were trading in a shockwave for about 157 days prior to the breakout, in which we broke upwards of 36% in about a month. Now, I don't expect the same type of 36% move on this breakout, but this is finally starting to break out of the range. The only risk at the moment is that we are still rejecting the GP on the fibs. So once we get over this, we can definitely see 230. Above 230, we can likely see 240 and 250 again within the next few months. But I've been waiting and watching BA for months now, and I haven't really day traded as much just due to the fact that I don't like the range that it's been in, but I do think now it's ready. Lots of other names that I've been looking at are all travel related. JetBlue is one of them. JetBlue has phenomenal upside from these lows. NCLH, all the cruise lines. NCLH has room for pivotal breakout here. RCL has already started to break out of its previous range, going back into the 2019 range. Lots of opportunities. There's always going to be a bull market somewhere. You're just not looking in the right places. Thank you guys for joining. I hope you guys learned something new. If you guys like my content, please hit that subscribe button below and like and share the videos. Thank you.